Based on your experience over the past few years, and as you're talking to more sellers, talking to more buyers, who do you find are some of the typical profiles of people that are still buying, right? Like some of these residential, like say semi-detaches or single-family detaches, detached single-family houses, and treating them as rentals, because the numbers are getting harder and harder to work. What do you see being the typical profile of people that are still buying them as rentals versus, let's say, a first-time home buyer?
I think most of the time now, when I see people buying rentals or properties for investment purposes, they're really focused on forced appreciation. They're not really looking at the cash flow portion of the investment much anymore, just because it's simply not there. The high taxation in New Brunswick, as well as rates that have increased over the last few years, it really kind of puts a damper on cash flow. It makes investors have to look at properties that they anticipate will have high forced appreciation over the next little while.
Yeah, I think that's really good insight, and that definitely very true. That's what I'm seeing as well. So by that, do you mean that these investors are buying these properties that are a bit run down, that they can do some work to it? Do you see those move a little easier compared to the ones that are turnkey?
Sometimes you can do well with a property that does need rehab, does need work. I also think that there's certain property types and certain locations of property that will have a greater forced appreciation over the next little while. And I think investors take a keen eye and looking for those. Semi-detached properties, I still think have a little bit of room to have some good growth over the next few years. You'll hear it sounds cliche, but we're definitely not no Halifax for sure. But when you look at their semi-detached market, their townhouse market, I got to think that we still have a little bit of room left there, especially if rates drop. And then another thing to touch on too is Money Sense magazine saying Moncton's the best place to buy real estate in Canada for 3 years in a row. That doesn't help local buyers at all. That's clickbait for the investors as well. So when they're waking up with their coffee in Ontario looking for real estate throughout Canada and they come across that article, it's likely a realtor in Greater Moncton's going to receive a phone call.
So other than buyers from Ontario, like where are you seeing these buyers from, right? Like, do you see a lot of new immigrants getting into these homes? Like, what are some of the typical profiles of buyers that are buying from you?
I think if I had to pinpoint a province, definitely Ontario, based on its population. We get a lot of calls from there. That would definitely be the first thing that comes to mind. Then, a smaller percentage, I would say, would be, local sellers and buyers.
Right. And these other province buyers, are they treating them as investments? Are they treating them as, are they relocating? What are some of the behaviors that you're seeing, being someone boots on the ground?
Yeah, I would say a bit of both. We're definitely seeing a lot of money moving to the East Coast when it comes to investing in multi-unit properties, and then also people that are just looking to get out of Ontario and have a shorter work day. Get off the 401 and come to some slower roads here in Moncton. However, I do feel though that with this tremendous growth that we have received, these roads are getting a little busy. We're not we're not big city yet, but 5 o'clock traffic in the north end is it's pretty legit.